Good morning, guys. Welcome back to another pre-market live stream here. Hope you guys are having a good morning. Sorry, I have been super sick for the past 2 to 3 weeks. I have not been able to really come on and do any live streams, but I hope that you guys are still doing okay. And I just want to log in here and give you guys a quick update. This is actually a pretty important pre-market stream. Lots going on in terms of price action. Excuse me in advance if you hear me coughing while I still recover. Okay. We have a little bit to uncover, or rather, yeah, just kind of break down here before the market opens. So I'm going to get straight to it. I hope you had a great weekend and had some time to prep. As of this morning, I don't see any great setups that are like out of this world risk to reward ratio wise. So we're definitely going to have to wait for today's market close to present some opportunities. But let's go through what we're looking at on the indices and everything else. Put everything together in terms of the macro and technicals so that you can get a greater or a clearer picture on what the opportunities are or the potential setups are for the rest of the week. Okay, we have two trains of thought this week. One is from the institutional side and the other is from the retail side. And they are both with very opposing polarized views. Now, last week, we had a big report come out from Goldman that, there was a lot of selling on the books on the tape. And all that selling was actually sold into on this rally up. So on the institution side, a lot of the selling that was meant to be sold was sold on this tape up that was presented last week. Okay, and retail, they were kind of pessimistic still. And they remain pessimistic. In fact, as of Friday, the equity put to call ratio is at one of the highest levels for this specific OPEX. And by the way, this week, $3 trillion worth of options expire on this Friday, or rather this Saturday, but on Friday they stop trading, right? Now, retail traders are more pessimistic than they have ever been, and institutions are starting to flip bullish, okay, which is really an interesting combo. The other thing is, after approaching the 4100 cycle level for SPX, after a snap rally from last week, we spoke about the 3910 bounce and how strong that would be because of the 61.8 Fibonacci extension. We pretty much hit the nail on the 4100 retracement. Now the question is where we go for the rest of this from here, from this part over here, and how we're gonna start to project this forward. So there's two ways to think about. The first way would be a little bit of a pullback. Obviously a pullback is gonna happen. Where the pullback is gonna end is the question. That's the question. And from the macro perspective, if you look at everyone keeps talking about, oh yeah, it all depends on what CPI prints on Tuesday. everybody keeps saying the same thing. I go on Twitter and I literally see the same shit. Everyone's posting the same thing. It's like, oh yeah, it depends on what CPI prints on Tuesday. Guys, it doesn't matter what CPI prints on Tuesday because CPI news is already priced in. At this point, we have a 75 basis point rate hike for the Fed priced in already. This is already priced in. There's no argument about it. Okay, so while everybody starts arguing about whether Tuesday's news is going to move the market, it's hardly going to move the market because it's already priced in. Yes, there will be volatility, obviously, for the event, and market's going to go up and down and up and down. But if the inflation expectations come out hotter than usual, then the 75 basis point is already priced in. What we are looking for is softer CPI numbers, which are going to be showing that inflation is actually curbing further down, and then that makes the 75 basis point less likely, but it's already on the table. That what that's going to do is it's going to shift the rest of the projections for rate hikes, which are further away in next year forward, and that's how it's going to affect the equity market. Okay, so in terms of 75 basis point rate hike, it's already priced in. You don't even need to think about that anymore. I don't know why people keep like, I feel like people they obviously don't understand how markets work, but you know, I just get very irritated when I read about stuff like that. Oh yeah, it depends on Tuesday. No, it doesn't depend on Tuesday. Tuesday's already priced in. Tuesday's been priced in this entire past week. Okay, that's not how the market mechanism works. We know that the efficiency of market hypothesis already tells us that any information that's available is instantaneously priced into markets, right? So you got to know this stuff, right? It's just finance 101. Okay. So taking into account the CPI number, the only way it's going to affect us is if it's softer. And the harder CPI number just makes the likelihood of a 75 basis point for the next Fed meeting more likely. But we'll have to obviously revisit that when it happens. Okay. As of right now, the 75 basis point for this meeting, which is next week, it's already happening. I don't think the Fed is changed their mind on it. They are not going to change their mind on it. It's not a probable thing at all. We are more than likely going to get a 75 basis point hike next week, and the CPI numbers that are going to come out tomorrow have almost no effect on that news. Okay, so whatever the people keep telling you about, ignore it because it doesn't make sense. What it will affect is the future rates going forward into next year or the end of this year. Okay, so talking about that, that presents two movements. If we get a softer CPI number, that rally is likely sustained all the way to 4,200 or 4,180, right? This little upward trajectory here, where we are likely to meet some kind of a trendline resistance. However, I really don't know if we are actually going to get there because I feel like there is a high chance that we pull back a little bit before we get there, and so we might get a muted response all the way back up here somewhere. In terms of the technicals, it does obviously seem like we have a little more further downside before the actual wave to the upside. And when I'm talking about the actual wave to the upside, I'm talking about seasonality wise, right? Because you have to remember that seasonality wise, which is what I'm showing you on this chart right here, in a regular year, September to October, yes, there is a sort of a dip here, but you can see with the midterm election year, it's more pronounced and it's more aggressive. And then the end, mid-September all the way to the end of October, mid-September to start of October is usually, you know, kind of a flat down, sideways movement, and then we rally into the end of the year. That's a midterm election year, right? Obviously, I'm not telling you this because this is how the market's going to play out. I'm just showing you statistically that's what the market does in terms of past interactions, okay? Obviously, we're discussing a lot of things on the Discord here in terms of market price action and whatnot. So there's a lot of possibilities here. One thing is we've managed to get the past 1 month of price action pretty nicely nailed. However, I will tell you that the next 2 weeks are going to be a wild card. It's going to be very difficult to predict what's going to happen. Mainly because of the market structure and then market dealer positioning, on top of the fact that retail traders are super pessimistic right now. To me, it just seems all the more possible that we're going to squeeze further up. But at the same time, you know, we have institutions unloading, and then we have them taking bullish positions, but then hedge funds remaining short. So the positioning of everything is very, very messy right now. And then all of this happening at the same time as we head into a week with $3 trillion of options expiring. It's going to be a firecracker week for sure. Now, some interesting things to note is obviously NASDAQ has a little more upside before we see a pullback. So we're likely to see NASDAQ get up to 12,780 or 12,800 before we see a little pullback. So don't be, don't be surprised to see the S&P 500 push a little bit higher before we get that pullback and trap a few more bulls here. And then we might, after all, see that backtest here. So we do need to see a backtest, right? And the backtest, ultimate level for backtest would be 40.15, right? Let's just call it 40.20, okay? And then obviously we, if bulls really want to stay in control, they really have to stay ahead of around 40.60, okay? 40.60 or so is a really good level for bulls to control if they want to, remain with that upside momentum. But this deep pullback here onto 40.20 would mean we would see some nice depth in this pullback and then possibly a further, more deeper pullback. Therefore, it's definitely going to be difficult to see where we're actually going to bounce. And this kind of a week is definitely one of the weeks where you want to take as little risk as possible, okay? OPEX weeks are always messy, and I've said that multiple times on the live stream before. This is the kind of week you want to take off from trading because it's going to be a messy week, and we're going to see a lot of selling pressure. There's going to be a lot of coverage of positions, all sides, bullish, bearish, whatever you may call it. Okay. On top of that, the VIX gapped up over here as the market went up today, so that was a nice, interesting little development. That means volatility is slightly higher as the market is higher today. And then this might be a good opportunity if dollar over here, let's say the dollar index, starts to really fade this rally here, which has been kind of parabolic. Then we definitely want to take bullish positions on gold, a flip to the upside. But then I'm also waiting for a technical breakout from gold here. So gold might range a bit more. It might range a bit more before it moves to the upside. That is what I'm looking at from the bigger time frame perspective. Okay, obviously we are in a demand zone right here in gold. So yeah, definitely watch that closely. Yes, this week is I believe quadruple witching. It's triple or quadruple witching. It's OPEX week. Yeah. So we have a calendar where we track it. It's a really simple one. On our Discord, we have this as a pinned message. For every week, it's here. So you can see for next month, for October, it's going to be the 21st, 22nd, and then November will be 18th, and then December will be 16th, 17th. So you got to keep track of those days. Every month, there's an OPEX. Okay, so that kind of is your technical perspective. So there, what is the summary of it? The summary of it all is we need that pullback to 40.20 and then see how the market kind of interacts with that level. 40.20 all the way to 40.60. That's your key level for support this week. And then obviously, if bulls manage to secure and hold above 40.60, that's really bullish. If we don't see a pullback of any kind, and then we might get that sideways movement to ultimately break out. Obviously, this line that I've drawn here is for a complete entertainment purpose, and remember that everything that we discuss here is for entertainment purposes. It's mainly just I wanted to give you guys all angles of it, where institutions are going bullish and then retail traders are extremely bearish, and that extremely bearish sentiment can cause squeezes. So it's really interesting. I think that we will see possibly that bearish move to trap more people, and then a huge squeeze. There is a very high possibility that happens. Like we see sell-off Monday, Tuesday, Wednesday, let's say into Thursday, and then maybe like Thursday into Friday, squeeze to the upside. This is just my random opinion. Okay, that's what I'm thinking. So yeah, I don't have any individual setups, but if you guys want me to break down any tickers, go ahead, put it right now, and I'll break them down. If not, that's all I'm gonna leave you guys with today's live stream, because there's really not much else to talk about. The only opportunity is gold, and I'm waiting for a confirmation on gold. Apart from that, I have hedges with volatility on SPX and Nasdaq, and that's the only thing that I'm playing right now. Yes, and I have a bullish position on Bank of America, $36 calls, which I will be closing out momentarily. So, yeah, not really that much. Not much going on this week, but as I was mentioning, this is an important stream because we are at a very dangerous pivot point. This spot right here is a very dangerous pivot point, because if bulls are not able to hold this, then we risk going all the way back down to 3,700 or even 3,600, right? The 39.10 then starts open back up as a support. Then we get a double bottom of some kind. And then if we break through 39.10, that opens up 3,600s or even lower, right? It could even be 3,400, that low. But then if we bounce and bulls hold, then that's going to result in the retest of 4,300. And then ultimately 4,500 and 4,600 or 4,700 even by the end of the year. So that's what we're looking at right now. There's really two extremes here. This is where the extremes of price action converges, and that's why this is important live stream to attend. I appreciate you guys showing up and turning up, by the way. Remember that if this is your first time here, make sure you subscribe and leave a like. I truly appreciate you guys taking the time out to be here. And yeah, I leave you guys with that. I don't see any ticker requests, so I'm gonna keep it short and sweet here, guys. I don't want to take up too much of your time. I'll see the rest of you on the trading floor on Discord, and we'll be trading live very shortly in the next 30-40 minutes or so. So I wish you guys good luck on this trading session. And hopefully by the next Wednesday session, my throat's a little better. I don't know if you guys can hear, but I'm a bit husky still. I'm still on antibiotics, so I'm trying to conserve all of my energy for these streams. Yeah, I will definitely be here on Wednesday. So I will update you guys on Wednesday again on what I see. The plan is play the downside, then flip to the upside and play the bullish side. That's the ultimate plan, if we can catch it that way. But otherwise, it's play the downside first and then watch. That would be the better option. All right. Well, I bid you guys farewell and take care. Peace, guys. Love you all. Thank you for attending, and I'll see you guys on Wednesday.